We're going to do a little video here. I'm putting my plums on the line. If I am wrong about this, every single piece of knowledge I've accumulated over my entire lifetime in the stock market will prove to be absolutely worthless. And you will all never take my advice again. But here I am. And I'm going to show you a little thing called the Fibonacci retracements. You may have seen them in some of my previous videos, but this time you're going to really see them. Here is the peak in March, and here is the drop for the coronavirus, right to here. And this glorious indicator gives us the Fibonacci cycle levels. We set it from the peak to the base of the move on the daily chart. And you can see that we respect these different levels on the way up. On the way down, you have to wait for a significant bottom and reversal to be able to plant the fibs. Then you can trade the fibs for the entirety of the fib cycle. Now, what is the entirety of the fib cycle? Well, the entirety of the fib cycle in this event would be 177.44 with a consolidation level first in here, and then in here, and then in here, and then finally we are out of this fib cycle, and that is no man's land. That is where the big money hands out the fun money coupons to whoever's willing to buy them as they take their profits for the end of the next cycle. Now you might say, wow, this is ridiculous. We're never going to get here. How do we know how long it's going to take to get here? It might take 10 years. It might take 5 years. Well, that's where trend lines come in. Trend lines help you time cycles. There is our long-term trend line that has been respected as support. We think we will get out of this cycle on a low end by August of this year. You might think I'm wildly crazy. Stock price is never going to get to 177. That's madness. Apple stock would be a $3 trillion company. Let's look at how many times this cycle has happened in the past. I'm going to zoom out. This was a much longer cycle than the one we just saw. Zooming out. Here we go. That's our current cycle that we are in. This is the previous cycle. Okay. 2013, we had a bear market and a reversal. Let me zoom in here for you. Long time ago, different price calculations. Okay. We drew our fib from the peak to the base down here. It's not very accurate. Should be up a little bit more. And we started our fib cycle, bull market. How do we know how long the bull market's going to run for? We don't, but we do know how high it'll go before there's an event. Rode up the fibs, respected the fibs. Each one is a consolidation zone. And we come across, and we come across, and we come across, and we break down, and we rise up. We battle the fib level, finally break out of it, battle the next fib level, all until eventually we break out of this fib cycle. Once we break out, that's no man's land. That is where they hand out the shares because it's going to be an event. Wow, an event. Who would have known? That was the coronavirus. They had handed off their shares here to everybody who is willing to buy above the fib level. Now, wow, what a fluke, what a chance. Can't believe that happened. 2 in a row. Well, it just so happens that this fib cycle has been repeating on Apple stock since its glory days in the dot-com bubble. Let's explore the 2008 financial crisis first. Here we have it. Zooming in, much different prices then. Zooming out to price, bear with me. It's a hard task at hand here. We have the 2008-09 debt crisis, terrible time. Our first crash, no base. Second crash, much worse. The real low was found in 2009. If you didn't know your market history, the 2008 crash was actually 2009. There's where we start the fib. We bring it down, no solid base, found a solid base. Now we can resume our uptrend. This is the hard part of using the fib, finding the base, getting in as early as possible. The earlier you get in on the fib and you're right, the more profit you make on that cycle. Ride the cycle up. This one lasted years. Years this one lasted. Look at that. All the way to 2012 until we broke out of that fib level. And then what happened right afterwards? An event followed by the real event. 2013. If you know your market history, you know that I don't know what the fuck happened in 2013, but I'm glad I wasn't invested. 2014, however, would have been a great time to understand that the bottom was in, and you could use the fib to plan out the next cycle, which we just went over. So let's go back to the dot-com bubble. How long do bubbles grow for? We use the fib to find out. Look at that. The good old dot-com bubble. Never know how long the cycle is going to take, but you know how it will pan out, where the price will go. Here is the dot-com bubble. That's a shitty morning if you own Apple stock. Look at that gap down. No thanks. Glad I wasn't there for that. Pretty solid base formed down here afterwards. Pretty shocking time, I can imagine. We bring the fib down. We know our base. Starting to go into our bull market cycle, right? Waiting on the fibs, retracing, breaking out, retesting, breaking out, failing. We're in these fib levels. We know where we're going to end up. We're going to end up breaking out of this fib. How long will it take? Nobody knows. This one took 7 years. And then what happened after it? No man's land. This is where they ship off the shares to all the loonies who buy it while it's ridiculously exploding. You're making 200% every week. An event, a crash, a retracement. Some people probably got smoked here by this strategy because they didn't wait for a solid base. But if you did wait, boom, you were given a gift. Another crash with a solid base in 2009. So we redraw the fibs and we just walk through this cycle. Let's go to present day. Wow, all that information I just took in. I can't believe how predictable this can all be. If only I'd known this forever, I'd probably be wealthy. But this is what research does. You constantly learn new things, find new things. Smoke a little bit of weed, helps you find some stuff. Anyway, March low. Pretty definitive bottom. We never ever went back there. So we're up here. This is not a timing tool. This is using our current information and seeing what we can predict with it. So we know that that bottom is in now. And we know that this March crash was a shock. So we use the Fibonacci level to gauge the shock. And we've pulled it down. We've respected the fib levels, failed breakout, breakout, holding that line now. And we have this white trend line. This is our speed that we're going through this cycle. If we break this trend line, we may consolidate in here we may break down to here, but we know eventually this cycle will continue and we will get to 177.44. Now, options is how we time, we benefit, we profit from timing the market. Impossible to time the market. That means it's impossible to buy the peak, sell at the peaks and buy at all the valleys every time. Absolutely impossible. No one will argue that. But setting strike prices and target prices is technical analysis, and it is very possible. So I have this fib stopped here. We can drag it all out to here. We can shrink it down to here to manipulate you into thinking it's going to happen even closer. But in reality, this could go on for 10 years. But because we have a very consistent trend line that we're going to trust, we will break out, because this pattern is known as a cup and handle pattern, which has repeated itself numerous times in Apple's history before a continuation of a bull market. Continuation pattern. This is the handle. We're developing a base on the handle and touching the support. Now, the way you gauge how your breakouts will come from the cup and handle pattern is by choosing price range. Now, your price range is from the top of your cup to the bottom of your handle. Okay, and then you take your breakout level, which will be the top of the cup, which we have to break out of to find your next strike. Happens on an event. So we drag this out. This line here I'm going to delete. I'm going to draw it again because it's in white. And then you can now clone this. Okay, and we'll bring that down to our first target, which would be the top of that, which is the depth of the handle. Right? I'll zoom in and give you a closer look. I can move this over here, it doesn't matter. This is the depth of our first price target upon a breakout. Okay, some people draw the cup breakout point from here, but we need to break the highs in order for it to be a breakout. This is the handle on decreasing volume. This is a classic cup and handle. On a more bullish event, such as a first $100 billion quarter revenue for any tech company in America, could happen right here. Something like that may call for a larger breakout. On the most bullish scale, you take the top of the cup to the base of the cup, and you use that to measure your breakout distance, which in this case would take us right exactly to the top Fibonacci level of this cycle at 176.36. Ladies and gentlemen, thank you very much for your time. This took me hours and hours and hours of staring at charts to realize what was right in front of me, and I'm happy to share it with you in 14 minutes on the nose.